Hello and welcome to CMC Markets Trading Outlook for the week of March the 23rd, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic for this week is Greece, inflation, and gold in focus. It's a much lighter week for economic news as well as for earnings news. We're getting down toward the end of the month and the end of the quarter, but a lot of the forces that we saw play out last week may continue to drive market action into the new week. The week just ending, of course, was dominated by the Fed decision where it dropped the patient language from its statement as was widely expected, which opened the door to interest rate hikes to start as soon as June. But then on the other hand, the Fed came out and cut their GDP, inflation, and Fed funds targets, which then had the street thinking, well, gee, maybe they may start raising rates still this year, but they probably won't do it in June. It probably come later. So we've had a lot of action in the U.S. dollar off of that, both in the immediate response to the meeting and then heading into the weekend as well. This has taken the cap off of a number of currencies that had been depressed by the U.S. dollar rally of the last few months, and also lifted some of the pressure off of commodity markets as well. So we've seen a euro rebound, we've seen crude oil rebound, we've seen gold rebound, and a number of the forces that have been at play are really coming together in gold as a crucible. Whether it's political risk in the EU, whether it's the actions in the U.S. dollar, whether it's the ECB and their quantitative easing program. So gold is becoming particularly important in terms of market action, and it's been rallying even days when we had some reversals in the U.S. dollar bouncing back. Gold has been hanging on to its gains. So gold is quite a significant market that may remain active in the coming week. I'm just going to highlight first some of the news developments that are coming out. On Monday we get the flash Monday night really, and into Tuesday we get the flash manufacturing PMI reports for China, Japan, U.S., Germany, and other countries. So this will at least give us an idea of where the global economy is heading in March. In particular, people will be keeping an eye on the China number. China has been trimming its interest rates and talking about stimulus. So people are going to still be wondering just how soft is the Chinese economy. That may be a factor in the early part of the week. Also on Monday we have another meeting between Prime Ministers of Germany and Greece, Prime Minister Merkel and Prime Minister Tsipras. As we move into the end of this week, some of the political fears around Greece have started to subside a little bit. There is talk that if Greece does come out with a new detailed list of reforms and not just kind of vague promises, that the lenders will be willing to start to lend the money again and call off the immediate financial crisis and the risk that it could drop out of the euro in the near term. So certainly things, it looks like there was a bit of progress made. That's eased back some of the political fears and helped the euro to rebound a little bit. This process continues Monday. German Chancellor Merkel has said previously that not to expect that this will get resolved in a meeting or two, but as long as things continue to head in the right direction, keep an eye on gold, on Greek treasury yields, on the DAX, and on the euro, and see how these things are acting. But as long as things seem to be heading in the right direction, can take some of the recent pressure off of those markets. UK on Tuesday, we get the other big reports, which are the inflation reports for the United Kingdom and the United States. One of the reasons why people have been looking at the Bank of England and the Fed as perhaps delaying and not raising interest rates as soon as their economies might otherwise justify is because inflation's been coming down. Part of this has been due to the collapse in the oil price. Part of this is also due to core inflation just generally sinking. So we'll be watching both of those reports today. Is inflation continuing to weaken or is it stabilizing? In particular, keep your eye on the core inflation numbers. Those are the numbers that the central banks actually use to make decisions. They ignore headline numbers. They don't overreact when oil spikes drive inflation up. They don't overreact when oil crashes drive the headline numbers down either. So keep an eye on the core figures. That's the most important thing. Later in the week we get U.S. durable goods, we get UK retail sales, we get U.S. GDP. These are less likely to have as big an impact on trading. The GDP number is the third go at Q4, and I mean we're almost at the end of Q1 now. People are going to be much more focused on how did the economy do in the winter than how it did last fall. Everybody's pretty clear now that it did pretty well at the time. It's a quiet week for earnings reports. However, on Friday we do get our results from BlackBerry, and BlackBerry shares tend to be quite active in and around the news. And with Apple capturing a lot of headlines this week on its entry into the Dow, we may see BlackBerry be active with some focus on the smartphone sector through this part of the month. I'll just highlight a few markets. Where we're at with indices is at a bit of a transition here. Things are starting to look up overall for world indices. We've got a lot of stimulus continuing in Japan, continuing in Europe. If the Fed does back off and not raise interest rates as fast as people expect, pushing it off, say, from June to maybe September, that can help to give markets a boost as well. Plus, historically, stock markets have performed well after the oil price has come down. That's usually opens up puts more money into the pockets of both consumers and businesses, and over time has helped the stock market in the past. Market crashes in 1985 and in 1998 helped to propel significant gains for markets in 1986 and in 1999. We still may see that kind of performance continue again this year. And one of the places where we're seeing this, interestingly enough, is we're keeping an eye here on what is client sentiment, particularly as markets have been bumping up against all-time highs. The Dow is up near 18,000, the DAX is up above 12,000, and what we're seeing here, interestingly enough, in the United States, is people are a little bit mixed. While the Germany had been charging ahead in the last few weeks, the U.S. had leveled off on anticipation of the Fed starting to raise interest rates. And now we had seen the market's been going up and down, but here on Friday it is up again, gaining about 1% for the U.S. market, while we have the DAX up about 1.3%. The U.S. sentiment is mixed on terms of number of clients. It's about 50-50. In terms of position value, however, we have seen it shift and a big jump in short positions. And what that suggests to me is that some clients don't necessarily believe this rally and have been bearish into this Friday rally here. But be careful, because it does look as though even though we do get short-term choppiness, one day up, one day down, the longer-term prospects for the stock market over the course of the full year remain positive. Looking at the DAX, people are much more bullish. We do have a 67% long position, and clients have actually been trimming that off a little bit, interestingly enough, as we have had a rebound here. Perhaps indicative that after the huge rally we had up from near 10,000 to 12,000 in a fairly short amount of time for the DAX, that it may be heading into a consolidation phase where we could see some range-bound trading in the DAX in the near term. Let's take a look at the charts. We'll start with the US 30. And we can see here, big rally back October to early December. Since then, it's been going kind of sideways. Did eke out a new high at the beginning of the month, knocked back pre-Fed, and now it's been starting to climb again. It is back well above 18,000 here. This is around 18,150. Looks like it could be gearing up for a run here at 18,300, 250 to 300 near these old highs. We want note here on the RSI, it is back above 50 and climbing, suggesting that momentum starting to turn upward again for the US 30. On the German 30, we'll see that it's had a pretty spectacular run here. From December, it was down at 92.25, and recently it got up to 12.213, almost 12.225. So in the space of about 3 months, about 3,000 points. That is a massive, massive move for the German 30 over that time. It has gotten quite overbought, and we could see it start to level off. This support here is 11.75. This is in and around 12.200. This is the 12,000 level. We could see it bounce around sideways for a couple of months, just like we saw it bounce around sideways back here in December, or bounce around sideways in the spring of last year to consolidate these gains. As I noted, that the gold market is a crucible right now, and crude oil has also been active, but gold is in particular a crucible with with sentiment towards Greece, sentiment towards QE, sentiment towards the Fed, all finding its way into the gold market and mixing together and pushing and pulling and tugging and tug of wars and things like that between the bulls and the bears. So we could see gold market remain active. Interestingly enough, we do have clients have gone net long in gold, even and holding this, even though it has rallied up quite a bit recently. Crude oil sentiment is a little bit more mixed. We are getting a pop here on Friday with the U.S. dollar weakening. The reason why the U.S. dollar is weakening is because it has rallied so much in the last few months on anticipation of a more hawkish Fed. The signs that perhaps the Fed isn't quite as hawkish as people thought has taken some of the wind out of the U.S. dollar sales, and that's enabled commodities priced in U.S. dollars like oil or currencies like gold to be able to rebound. So we have some mixed sentiment here on this. Number of clients are net long in terms of crude oil. However, we are seeing that the short positions against crude oil have jumped pretty substantially here, up 25% in one day, and up 13% for all clients. And what that suggests to me is that a certain number of people are not convinced about the rally and have been taking bearish positions against it. We'll see how that goes. Crude oil overall has been heading sideways, so we could see this kind of choppy trading continue. Just wanted to, I'll now show the charts for gold as well as crude oil. Let's start with gold. So, gold had been in a downtrend for the last little while with the US dollar rallying. It's now broken out here out of a falling wedge pattern. That's a bullish signal, and we've seen it after this big engulfing day here continue to work its way higher. Momentum had been pointing lower here. Gold had gotten quite oversold, and kaboom, it's broken momentum and is working its way up towards 50. Downward pressure easing, and it does appear as though a change in momentum may be underway. Support right now has climbed up towards 1170. This high here is around 1183, 1185, 1200 level here for gold. Does appear to be trying to turn around as the day progresses. So that's actually quite interesting. I'm actually going to draw a line here for gold while I'm at it. Actually, it won't let me do that. Okay. Let's move on. Anyways, it looks like it's trying to break out of a broader downtrend as well. That's what I was kind of trying to show there. On to the next one. Crude oil. We're seeing that after the big sell-off, let's make this a little long. Let's go to a year chart. A big sell-off, crude oil's gone into a trading range. The low end of this range has kind of come down to about 42. The high end of the short-term range is about 45. It did get oversold, so you're seeing a bit of the unwinding of that. But overall, this does remain in a downtrend. 40 remains a possibility. 2008 low is in and around 35. So there's still room for some weakness in crude oil, although in the very short term, we may get a bit of a trading bounce here. If we get through 45, the next resistance is up here around 46.80, and this one here around 48.30 for possible rebounds in crude oil. Also, just wanted to highlight in currency markets, I've talked about that we've seen some swings in gold, we've seen some swings in oil, and that the U.S. dollar is getting knocked around. So what are we seeing here? We're seeing though that clients are still net short on the euro dollar. It's had a bit of a pop here, but there's still some bearishness towards it but one thing we do want to watch for here is this 97% top clients short against the U.S. dollar. This is a very crowded trade. So as we've seen this week, it does lend itself to potential snapback rebounds on not much notice just because of the extreme oversold position. If we look at dollar CAD, this is long U.S. dollar short CAD. Instead of 97%, we have top clients short about 80% against the Canadian dollar here, with crude oil starting to bounce back. So we'll keep an eye on how this acts relative to the crude oil price. I'll just highlight a few currency charts here before we wrap up. We'll start with the euro dollar, which has had a pretty substantial rebound in the last few days here. So Eurodollar has been trending lower. This downtrend had accelerated. It bottomed out here recently and is starting to pick up. We've had an initial rally. Now we've got a symmetrical triangle forming of lower highs, higher lows. This is a common consolidation pattern. Since went into it with a rally, one would expect that this is a consolidation within an emerging uptrend rather than a larger downtrend. So it does appear we're still base building here. This support here is around 106.40. This is around 107. This first Fibonacci here is about 108.40, and then this next Fibonacci here is closer to 110. So these are Fibonacci's drawn off the short last sell-off, and these are based on longer-term trends. The euro had become extremely oversold before the Fed meeting, and so it's not a huge surprise that we are seeing a nice technical rebound underway. I'll look at dollar CAD as well, or actually let's start with pound. We'll start with cable here. Looking at cable, what we're seeing is it's been pushed down. This is more by through U.S. dollar strength. Had another downdraft in early March, but now look, it's hammering out a pretty strong base here above 147. Look at these candles here, pretty consistently above 146.90. Cannot really get through, and this base here of the closes is closer to 147.50. We do see that momentum is turning and downward pressure is easing, but realistically, the first resistance about 149.20. But this big one here, the 150 round number, it's really got to get back up through that to signal a meaningful upturn for cable. I'll do Aussie and Kiwi dollars as well here, as we shift over to resource currencies. The Aussie dollar here basically continues to base build. It's been going sideways here. It's in a range between about 75.50 and this in here is about 79.20. It is trying to stabilize. We are getting some higher lows here, and we are seeing some improvement here. However, it's really got to get up through 50 to suggest that this is so far this broader term downward staircase. If we're going to suggest that this is a turnaround, it's got to get back above 78 for the pair, back above 50 for the RSI at a minimum. The Kiwi dollar is going sideways as well here. We had seen it drop off pretty substantially, though. It does look like it's now put in a double bottom here, in and around between around 71.50. We have gotten a bit of a pop here. It is creeping up towards the high end of this trading range. If I bring this down. We can see now here at about 75.65, it is bumping up against 23% Fibonacci retracement, and here this is 77. We can see it as a support level became resistance. If it breaks that, would be a significant sign of an upturn. RSI is back above 50, suggesting that upward momentum's building for the Kiwi dollar. But of course, we also have to be careful about the RBNZ. Has threatened to intervene in the fast if this gets too far ahead of itself. But if we do start to see clearing 76, a run at 78 here, this 38% Fibonacci retracement does look like a possibility. The last currency we'll note here today is US dollar CAD, which has been strengthening, leveling off a bit lately, actually, to be honest. This has been driving higher on the collapse of the oil price combined with the rally in the US dollar. But look at this. Since the beginning of February, it's pretty much gone sideways. We've now, it looks like, getting a double top in place here about 128. This is actually quietly starting to roll over. Resistance has come down to about 127.20. This line here of closes is about 125.80, and we are seeing a peak below. So, and meanwhile, we had hugely overbought, is working its way back towards 50. So far, this is a consolidation within an ongoing uptrend, but if we do see it start taking out 125, and particularly if it gets closer to the support here, 123.80, and if RSI starts dipping below 50, could be a sign of a top and a reversal starting to happen. So even though there's not a lot of headline news this week, there is still a lot of market action going on, and it does suggest that we could see some opportunities for traders throughout the week.